and welcome to the back half of the year. I'm Gillian Seguin. I am an Associate Wealth Advisor with Reyes Group at IA Private Wealth. This is, of course, your Q2 2026 general commentary. The markets were pretty good again in this quarter, with major averages hitting all-time highs, despite the significant swings that we continue to see in energy prices and the sustainability of AI spending. As a reversion to the last 18 months, the U.S. equities actually outpaced Canadian equities just marginally. The S&P and NASDAQ rose 14% and 20% respectively, and this is on pace for their biggest quarter gain since the second quarter of 2020, so going back to COVID time. The Dow gained more than 12%, headed for its strongest quarter since Q4 2022, and the TSX only gained 6.37%, but nothing to snuff at in only a quarter's time. Statistics Canada actually has reported the strongest economic growth rate the country has seen since July 2025. A lot of this was stimulated by construction, improving activity in the housing market in Canada, and increased public sector spending. So some government spending, of course. And then, of course, the biggest contributor is energy again. One of the laggers in Canada is manufacturing, but that seems to be pretty cyclical, so not a surprise there. The biggest hang-up in the Q2, or maybe one of the biggest discussion points, was of course CUSMA, the agreement between Canada-U.S. and Mexico. As of the July 1st deadline, they had not negotiated and re-signed an agreement, but the reaction in the market was muted considering that the current agreement is actually in effect until July 1st, 2036. So what we're likely to see is perhaps annual meetings, ongoing discussions, but nothing is going to kind of fall off the rails in the meantime. The lack of agreement then just continues to contribute to the uncertainty with tariff and trade rules, but again, market is pretty muted on those points. Perhaps the biggest hang from the lack of CUSMA is the effect on our currency. Our Canadian dollar has actually traded down to 70 cents on the dollar. This is only a penny or two away from the lows of COVID and tariff day. This doesn't seem to be a Canada-only problem, though. It's more so that the U.S. currency has gained traction and has rallied quite a bit. And so when you look at it in comparison to the Japanese yen, which is trading at its lowest point against the U.S. dollar dating back to the 80s, the euro has also weakened. And I guess the two other headwinds on our currency here in Canada is how we are often referred to as a petrocurrency. So when oil prices fall, as they have done from $92 a barrel to $70 a barrel over the past month or so, going into the end of Q2, we will see a weight on our Canadian currency. In addition, the gold prices have fallen, and we have been somewhat tied to gold prices as well. So we have seen price of gold fall from $4,500 an ounce to $4,000 an ounce. I'll close out this general commentary talking a little bit about the fact that indicators still look good going into Q3. One of the biggest indicators of U.S. consumer spending is, of course, Amazon Prime Days, which we had from June 23rd to June 26th. And in that 96-hour time frame, we saw $26.4 billion being spent. This is a 9.3% growth over last year's haul and indicates that there's still a pretty healthy appetite and some discretionary money sitting on the sidelines in the U.S. and Canada. I think that is it for today. I wish everybody a wonderful summer and thank you for joining me.